Welcome to the Financial Armor Show. My name is Brad Cooper, CEO of Cooper Financial Investments, and I want to welcome Tony Shore, my co-host. How you doing today, Tony?
Oh, I am doing great. I've had a great day. We were talking
Wonderful.
earlier, I've been busy, but you know what? That keeps me out of trouble, keeps me going. And the day has flown by, and I'm glad it's
Yes,
finally time to do the show. I've been looking forward to seeing you again, Brad. Thanks for having me on the show. How are you doing over there?
I'm doing great, Tony. It's good to see you again. Just excited about this week's show, and
Yeah.
before the show, we're just talking about how beautiful it is up in Minnesota now, how warm it is,
Nope, it's
and
not.
how miserable Arizona is
No, it's
right
beautiful
now.
there. You're gonna hit 80 soon? Is that what I
Actually,
heard?
yesterday, Tony, my daughter, my oldest daughter of two, both are
Mhm.
pregnant. So they're going to
Oh,
give me
wow.
grandchild number 2 and 3
Wow.
this summer.
Oh my
However,
goodness.
my oldest daughter had a gender reveal party for our entire family,
Oh, wow. How'd that
and
go?
it went great. All day we were outside. It was about 82
Oh,
degrees. Couldn't have been more perfect of a day.
that's nice
And
though.
on top of that, of course, I'm so proud. I have a 6-month-year-old grandson, but she revealed to the family, which we all thought it was going to be another boy, but we found out it's going to be a girl, and they're going to name her Georgia.
Oh, that's a great
Yes,
name. So the gender reveal party was for you found out you're going to have a granddaughter named Georgia,
yes.
and you already have a grandson,
Beckett is my grandson.
Beckett, who's 6 months, and now
Yes.
you're going to have a granddaughter named Georgia.
And she's due July 28th. But then my youngest daughter, Maggie, is pregnant and she's going to be giving birth, which we found out recently, to a girl. So we're going to have two granddaughters. Her daughter's name is going to be Charlotte. So we're
Oh,
going to
I
have a
like that.
Charlotte and a Georgia. And they were teasing each other yesterday because they're both named after cities and states.
Yeah,
So
yeah, yeah, yeah. I mean, that's what's the next child going to be? Atlanta? I mean, you're
exactly.
gonna have to come up with something. That is funny.
Minneapolis, Minnie,
Yeah,
Minnie Pearl.
yeah, Minnie Pearl. I guess, yeah, Minnie Mouse, Minnie Pearl. There are a couple of minis there.
Oh,
Well, that's great though. Seriously, three
yes.
grandkids. You're gonna have two granddaughters. Well, you're gonna love it. They're gonna love Grandpa. I hate to call you Grandpa. You're much too young to be
That's
called
okay.
Grandpa. Yeah,
You know
yeah.
what? What I've experienced the last 6 months, Tony, and I know you're going to be there soon. It is so amazing. You can just love on them and spoil them rotten.
Spoil them
And
rotten.
then you give
Yeah,
them back to mom and dad. They take them home and
yeah,
they can stay up all night.
yeah. Load them full of sugar.
Yes.
Spoil them with toys and sugar, and then just send them
Like,
home. I
it's
love that.
funny.
Yeah.
Yesterday, little Beckett, I was holding him and I said, wow, I smell something. Guess what I did? Mom,
Oh, yeah. You didn't offer to change that
Dad,
diaper?
why didn't you change them? Well, I could. And trust me, I changed
Yep.
so many diapers in my
I've
life
changed
and I have
diapers
no
too.
problem. But that's
Yeah.
one of the perks, which I took advantage of and
Oh,
cashed in
yeah.
yesterday
Yeah.
since mom was there. If mom wouldn't have been there, I would have given them to
Of course.
Gigi, my wife,
Well, yeah,
and she could
of
have changed them.
course. Of course. Yeah, of course. Of course. Now, what do they call
So
you? Do they call you Papa or they call
I
her
am
Gigi?
Papa.
Shelly is Gigi
Yes, and then I'm
and
Papa, which all
Papa.
this new
Papa.
names,
That's right.
all new to me. Growing up, it was
Papa.
grandpa and grandma.
Yeah,
But
me too. Yeah.
what are you going to be called? What do you mean? Well, I got a good education from my wife and from my daughter. So I'm Papa. My wife, Shelly, is Gigi.
Yeah.
And it's such a blessing and a great stage to be. Now I know a lot of how our clients feel, Tony, when they're talking about their grandchildren
Oh,
and such a blessing they are.
someday I'll get to
You
experience that.
will.
Yeah. Yeah.
It's great. So you have a little bit more hair that's brown that needs to turn gray before you get there. See,
Yeah. Oh, I've got
if
some
you're
gray in there.
watching,
Yeah, I've got some gray in there. It's starting to come in. It'll happen soon enough. I don't want to rush it. But today's show, jumping into our topic for today,
Yes.
I mean, we could talk about how great grandkids are and how you spoil them all day. I mean, that's Brad. I know you're good at spoiling your grandkids. You're going to be great at that. I mean, now you only have one. You're gonna that kid is getting spoiled a lot right now, but now
You
you'll be able
know,
to spread it around that love
spread the
around.
love, spread
Yeah.
the money, which really ties into today's topic. What
Oh,
2026 could mean for retirees and how to prepare and plan and spoil your grandkids with more money.
okay. So,
Mm.
what are we talking about? We're talking
You-
about, I think, for people saving for retirement who have already retired and are taking income. The last few years have been favorable, or for those of us saving for retirement, boy, we've had three pretty good years, right?
Well, we have Tony, and I came across a, U.S. News and World article. What do the markets have in store for retirees in 2026? And we were just talking before the show a couple of weeks ago. We were in Scottsdale, and one of our lead money managers, Keith Gangle,
Oh
who
yeah,
spoke and has won many awards on Wall Street the last several
yeah.
years. We've had him on as a guest. Going to have him on again probably in the next month or so as well. But, like you said, Tony, the last 2 or 3 years has been very positive, and really the forecast for the next few years is very positive still, with strong market performances.
Yeah. Yeah. In fact, I heard Keith talk today. He was doing a live TV appearance, as he often does.
Right.
And I happened to be there at the taping, and I was really glued to hear what he had to say. I know he's been meeting with people like Brian Belsky and other Wall
Yes.
Street analysts and some other money managers here at Gradient Investments. He was talking to Mike Binger, but Keith is a sharp guy. He's been around this
Oh,
for a
yes.
long time, won numerous awards, and I was kind of surprised at how bullish he is being. He's a pretty positive outlook for 2026. He thinks this year is going to be pretty good. Nobody has a crystal ball. He thinks, could we see a 10% correction once or twice this year? Sure. But he thinks we'll end up the year above, you know, last year, a few months ago, he would have probably said 7-8%. Maybe it's going to be
Right.
a lower return. He's thinking, I think we'll get back up there, 14% maybe.
Right.
So he's looking at a pretty good year. But again, things happen, right? And different things can change the market. He doesn't sound like he's too concerned about, some people say, is the AI bubble going to burst? And he doesn't
Right.
think it's a real bubble yet at this point. So he's not too concerned about that. But those are questions I know you're going to ask him about when we have him on the show here in the next couple of weeks.
Right.
But 2026, we do need to look at what the markets have in store for retirees out there. And I know that article had some facts, and you've been talking to folks like Keith, and
Right.
I think that's important, right?
Absolutely, Tony. And, this coming May will be 33 years, believe it or not. I've been in this industry. I
Wow.
started when I was 3 years old, by the way. Oh,
Yeah. Yeah.
right.
You're only 36. I mean,
Yes.
you must have started when you were 3.
But, up until Tony, maybe 12 years ago or so, I never in my career had access, nor could I talk to on any given day any money manager, analyst. And that's, one of many things that makes us different is we have access to our money managers, our analysts, which are some of the best
Yeah.
of the best on Wall Street. And not only that, and I share this with our clients too, is if are maybe a pretty analytical person and you have lots of questions and you want to know more in detail about how the markets work and money management, they will even set up a call and do an appointment via usually Zoom or Teams with our clients, Tony, which I've never heard of any other managers doing that in our industry.
Right.
So, let me just,
It's
I had
huge.
this question a couple of weeks ago. Brad, you talk about money managers. Money managers, what do they do? Well, money managers that are different than myself, as a financial service professional, financial planner, I'm meeting with people on a daily basis. I'm educating, advising on recommendations based on their goals, their objectives. But where a money manager comes in, they're responsible for creating these portfolios. They're behind computers, 50, 60 hours a week, and they're choosing the companies, the stocks, the ETFs, the bonds, and they're actively managing these portfolios on a daily basis. So as things change, Tony, they can change with it. It's completely opposite than what a lot of money managers still do on Wall Street is what's called the buy and hold principle. I call it buy and hope. What's that mean? You invest, you ignore it. 30 years later, you look at it and you pray and hope that you make money.
Hmm.
So that's, what a money manager does. But Keith, along with Mike Binger and the whole team at Gradient, they keep us updated and they are positive. Everything that you just shared, Tony, is exactly what they've been sharing with us. They are very optimistic, especially over the next 5 to 7 years.
Well, yeah, and I think that's good. And they look at a lot of different factors. And
Yes.
it's neat to know that it's good to know that the people you work with, their portfolios are being actively managed by people like Keith and the portfolio managers at Gradient Investments, and they keep an eye on it. And you're in constant direct contact with them. I know you can just pick up the phone and call
Right.
Keith on his mobile at any time you want, or Mike Binger, the president, even
Yes.
of the company. And when he's not on CNBC or Fox Business News, that is. And Keith has been on there a lot too. And so I think that's great that you have that direct line to the people, and they're actively managing the money. It's not like the money that sits in your 401k. Is that actively managed to meet your personal goals? No, they
No.
don't know your personal retirement goals, and you don't know necessarily what you're paying for fees. You should, and it's somewhere in that prospectus in tiny print. But your clients, you can say, here's what you get, here's what's being done, and it's that our people are actively working on it, so you don't have to worry about that. And I think that is fantastic. That's a huge piece of the puzzle. Right.
It is, Tony. And you mentioned 401ks, which this is pretty scary. Most people have the majority of their wealth, their savings, their retirement in 401ks, right?
Yeah. Yeah.
And for the most part, they're not managed. And
No.
most people just try to guess. I'll never forget, talking to many clients over the years, and I've had this happen to me too. There's a 401k option available. You have all these funds to choose from. It's just like picking, just choosing, the ones that you feel good about. So to have that accessibility of, the education, the experience of money managers, what that does for our clients is just so powerful. And, also too, I want to just further, talk about active management and our money managers. They're fiduciaries. They understand risk. They understand when you're 65 or 70 years of age, you shouldn't be taking on, in most cases, the same amount of risk that maybe a 35-year-old is taking.
Yeah.
The biggest asset we have right now, Tony, you and I, because we're still working, is our income. But once you retire and you give up that biggest asset, your income, you're then relying on money maybe from Social Security. Pensions, not so much anymore. It seems like those are going away with most of the people I meet. But then I need to pull money out of my investments. And I want to make sure that lasts for the rest of my life. So having that expertise, that communicates with us to keep us and our clients updated is priceless and so much value, which most people aren't getting. But, going back to the markets, yes, Tony, we're optimistic, we're bullish, our money managers are bullish, but, in the article, what do the markets have in store for retirees? It talks about it's very uncommon and rare to see 4 straight amazing years in the market.
Yeah.
So we're approaching 3, maybe 4. So you're right. What we're hearing is exactly what you heard from Keith is expect maybe a small dip, a correction, maybe negative 10%, maybe negative 15%, but then it's going to rebound and go back up unless something major happens
Yeah.
out of their control.
Yeah, I mean, when you look at the past 3 years together, yeah, it's been over 20% annualized return, roughly. So that's huge, isn't it? I mean, according to that
It is.
article, that's what it is in the S&P 500. That returned 16% last year,
Right.
and I think it looks like it could do that again this year. We'll have to see, but I think you look at the earnings of
Right.
companies more than anything else. A lot of people look at, oh, what's happening in the world? Is there unrest? And the sky is always falling if you watch the 24-hour news channels,
So
but
true.
you can't get caught up in that, right?
Right. Number one advice our money managers and their analysts give us on a regular basis is turn off the TVs. Don't get caught up in the gloom
Yeah.
and doom. Keep in mind, and I've shared this before, fear is what the media wants to come across because fear makes money for the media
Fear sells
outlets.
ads
It
and
does.
puts viewers in the seats, so to speak.
Now, with that said, Tony, you know, don't be greedy yet on the other side. You know, the markets have been good, but
Right.
also being diversified, which is a term that's so overused in our industry. I don't like it too much. I like the term non correlated. When you're looking at your investment portfolio, and we take risk very serious as a fiduciary, that's the number one thing we look at. We measure that in 2 or 3 different ways for each client. And don't be greedy. You know, we usually under promise and over deliver with our projections, but with risk, by being non correlated, what that means is don't put all your eggs in one basket, but don't have all your investments in the same sectors, like
Right.
all your money in the S&P 500. Back in 2008, I just read this not too long ago. In 2008, from January through December, the average investor lost over 36% just in that given year. All 11 sectors of the S&P 500 were down. So most people back then were told by their financial advisors, you're diversified. You have 15 different mutual funds. You have 10 different bonds. You have 3 different stocks. But the problem, Tony, is they were all invested in the same sectors, which all
Hmm.
went down.
Oh,
That's called correlation.
so
Being
you're
non-correlated.
not truly diversified
You're
then, even though
not.
you thought you were.
Non-correlation may be, yes, S&P 500's fine, tech's fine, international, AI, digital currencies. So being, in different sectors throughout the global economy. And here's what's probably going to happen here. And this came from Robert Shiller, one of the greatest money managers still today on Wall Street. Robert Shiller told me in a meeting a few years ago, he said, Brad, you want to be in a portfolio that's non correlated. And some years, some of your portfolios will zig while the others zag. And the others will zag
Sure.
while others zig. That's what he basically told me right in front of me. And he's right, because there's a lot of portfolios that do very well when the markets are down. There's portfolios that do very well when the market's up. But you know how many times I've been asked this, Tony, the last couple of years? Well, Brad, the market's up over 20%. I'm only making X percent.
Right.
Well, you're not in the exact holdings, but now go back to 2022. We all have short memories. Tony, you remember what happened in 2022?
Yeah, we had our first down year in a long time. I mean, where the whole year was down,
Right.
stocks and bonds, everything was down and lost value, right?
Lost, I talked to some new prospects, not our clients, but new people during that time period and right afterwards that lost anywhere from 20 to 30% of
Yeah,
their life
because the
savings.
market lost 20 to 30%.
Right.
Yeah.
But I looked at our clients for that year along with their other accounts they had. And because they were non correlated, none of our clients lost overall in their portfolio since inception. So,
Wow.
why is that important?
It's
One
hugely
thing that you got
important.
to realize is Yes, making money is good, but if you lose 30% of your life savings, the next 12 months, you need about a 45% return on your money just to break even. Most likely that does not happen. So it may take 2 years, 3 years, 4 years to recoup what you lost. So it's not making the most money that's the most important. It's really protecting what you have from a major loss, especially when you're in retirement.
Yeah. Yeah, that's huge. And so to be able to say that and do that and to truly have a balanced portfolio and balanced assets is really, really good. And we're not just talking about, oh, I've got stocks and bonds. That's not what we mean by balance. So, there's a lot more to it than that. And like you talked about, you have to look at correlated funds. And some people they say, well, I've got this, this, and this. Yeah, but they all have the same things in them, right?
Right.
And then so it's really not as effective. And so you can lose more that way when the market's down. So you have to your ideal is to try to level out the bumps as it grows, and you want long-term growth and then level out the bumps as much as you can, right?
That's right. And, my definition, and I'm going back the last 50 to 75 years, if you take the average portfolio, you know, take out take the good years, take the bad years, average them all together, you're looking at it on average of maybe 8 to 10% return on average with
Yeah.
losses and gains. Why take all that risk if you don't have to and still enjoy making those similar returns and not have to worry about losing 20, 30% of your portfolio? So before time's flying, Tony, as always, but there's two other
Yeah.
areas that I want to share with our listeners, which Keith shared during our last visit, our analyst shared with us, but I get a lot of questions about this. Have you ever heard, Tony, of AI, artificial intelligence?
Yeah, we've all I don't care what age you are or where you live or how tech savvy you are, we've all been bombarded with AI, haven't we?
You know what? If we were really younger, Tony, we could probably make this show AI and that's not even be here, right?
Right, right, right. But
I'm
it's
not that
one thing
smart.
to have heard about AI and continually hear about
Yes,
it and then understand what that means. Those
that's
are two
right.
different things. Yes, I've heard of AI, and I've even used it in some
Yes.
instances with help with copy, things like that. But yeah, that's a big thing. So clients probably ask you a lot about that or about investing in it, right?
Investing in it. And
Yeah,
you're right. I feel the same way, Tony. We use it, but I'm not an expert on this area. But AI is the future.
yeah.
AI, let me just tell you this, is not 100% accurate today. It's getting better as the months and years go by, but
It gets better and better.
it is. But keep in mind, and I think this is part of the forecast and the bullish forecast as well, is AI is driving a lot of these companies and their growth, and they're doing it in a more efficient way because it's less expensive. Therefore, more gains and less cost for the company. So AI is a big push. So that number one, and we have portfolios, ones that Keith have created and his team that have primarily artificial intelligence in them, along with a few other, digital currency, crypto, but mostly AI. So that number one, but two, here's the big takeaway from a couple weeks ago in Scottsdale, Tony, that the meetings that you and I were in with Keith and Mike Binger and our analyst is the opportunity they see over the next maybe couple years is in more small to mid cap companies. What does that mean? Instead of just investing all your money in the Amazons, the Facebooks, the Apples, which are just so huge, are they still going to grow? Yes, but maybe not as fast as they had the last 10 to 15 years.
Plus, they're expensive to you. They might be
Oh, who can
overpriced.
afford it?
Yeah, yeah. And
So
even if you can, it might not be the best place to put all your money because you're getting less for the same amount of money. You get less, right?
that's right. So,
Yeah,
you know, Gradient, with the lead of Mike Binger and Keith Gangle, has put together a small to mid-size company value stock portfolio that they believe these value stocks that are not as large as the Amazons and the Netflix and the Apples are going to have great potential for maybe more growth as well. So that's just another way of, just adding to your portfolio and being wise over the next several years and taking advantage of the next 5 to 6 years is the forecast. Because once we get to the 2030s, a lot of unknown out there.
Yeah.
And, but at the end of the day, no one has a crystal ball. We want to be smart. We don't want to be greedy, and take risks very seriously, because we're just one stock market correction away from maybe your portfolio being devastated and wiped out.
Yeah. Yeah. And that's huge. I think you have to look at that. And that small to mid cap, I'm curious to learn more about that. I think that's a great opportunity for a lot of the folks you work with, a lot of our listeners and viewers out
Right.
there. You're going to want to hear more about this. And in an upcoming show, we'll have Keith Gangle on. I know you're working on getting him
Yes.
as a guest on the show to talk about that in more detail, correct?
Yes, I'm excited. We're just working out the final details and the dates, but expect to hear from him over the next few weeks and give an
Yeah.
update and better explain some of the portfolios and what his forecast is then as well. And then one last thing before we end the show, Tony, we're just a few weeks away from Ed Slott coming to Arizona, February 24th, which is a Tuesday, February 24th from 8:30 to 11. We're going to have a free breakfast for all attendees, and Ed is going to talk and give updates on taxes, which is on everyone's mind right now because everyone's scrambling around trying to find their W-2s or 1099s, but he's going to give updates on future taxation, the Big Beautiful Bill Act, and much more that is
and
going to be
answer questions that people
Yes.
might have. He's going to, if you have questions about, well, what does this mean for me? Or what's that extra $6,000 deduction if I'm over 65? I mean, there are so many things going on, and do I really need a Roth, and at what age does it make sense or doesn't it? And I know you and him are going to talk about that, but bringing him in to talk about that and having that breakfast is huge. And I think people think, oh, you're going to have a talk about taxes, that's going to be boring, or having to sit there. Ed Slott is not boring. That
No.
guy is on fire. Number one, he's got one of the most brilliant tax minds. He's probably the foremost tax expert in the country at this point.
Yes.
He's got a brilliant mind, and the opportunity to see him and hear him and talk to him in person is, you don't want to miss that opportunity. And he is really also funny. I love talking to him. We've
Yes.
had him. You've had him as a guest. I can't believe you've got him as a guest, and you got him coming to an event so that people can attend. So if our listeners want to attend that, how can they reserve a spot there?
Good question. The website just finally went up. It's active, and seating is going to be limited. Ed Slott Event, EDSLOTT event.com. EdSlottEvent.com. It's a free event to the public and our clients, and you don't want to miss it. And one last thing I'll share as we close, Tony, is everyone gets so caught up with, wow, if I could have made an extra 4 points on my return, 5 points, 3 points. Well, how would you like to save maybe 20, 30, 40% of your money per year in taxes? What's more important? Much bigger, which that's a topic that's getting neglected, but he's going to talk about that, and you don't want to miss. So.
No, that's huge. Well, I think that's an amazing opportunity, and you want to minimize that tax burden. And believe me, you'll still have a tax burden in retirement if you don't plan correctly, but you can plan to eliminate that tax burden or at least minimize it, right? And
Absolutely.
the way to do that is to attend that event. And again, it's not a sales event; it's a learning
No,
event. It's educational, so that's fantastic.
100%.
So it's a no brainer. You got to attend that event. I mean, I love Ed Slott. He's one of my favorite people. He's a great guy. He's been doing this forever, and he's sharp. He is so sharp. He knows his stuff, and yeah, he's got a great mind, and he's a great tax strategist. I mean, if
Yes.
you want to know how people think, how do these billionaires, how are they not paying taxes, or how are they having lower taxes, or how can I have lower taxes in retirement? Ed Slott knows the rules, and
He does.
those who know the IRS rules win, and it's tough when there's 77,000 pages of rules. But Ed Slott knows the strategies and knows how to work it, especially for retirees. And I know he works. You have Ed Slott as a resource to help your
Yes.
people you work with. So this is fantastic and great show today, talking about kind of what 26 could mean for retirees. What's this year going to look like?
Right.
And taxes are a big part of that. So that is great. And again, that's edslottevent.com. Is that right?
That is correct. EdSlottEvent.com.
And that's slot with two T's.
Two
So,
T's.
yep, there
And
you go.
and also too, one last thing on that is he's going to be doing a book signing. So the first 125 couples that get there will get an autographed signed book by Ed. It's his most recent book he just released last year.
Wow, that's awesome.
So
Wow, that's even better.
it
It
is.
keeps getting better and better. You got breakfast,
Food
you
and
got
books.
yeah,
How much better
wow.
can it get?
Food,
So
books, and Ed Slott. Well, hey, and if our listeners out there have questions in the meantime, or want to set up a no charge, no obligation consultation with you and your team there
right.
at Cooper Financial, all they have to do is call 888-390-5277. Or go to financialalarmorshow.com, right?
That's right.
All
Thank you,
right.
Tony. What a great show. Appreciate you, and be excited about 2026. A lot in store and a lot more to share in the shows to come as well.
All right. Well, thanks, Brad. Thanks for
Yes.
having me on the show. And listeners and viewers, thanks so much for tuning in. That does it for today's episode of the Financial Armor Show with our host, Brad Cooper.